I don't know about seasonal things. They do seem to replay themselves once in a while, Ryan, but there are other things going on in the world. What's your prognosis given just the overall levels of the market, whether it was February or some other month? How are you feeling?
Right. Yeah, Joe, I mean, we're still feeling pretty good, right? Two interesting things going on right now. Like you said, it's the best start to a February in 30 years for the S&P. Best start for small caps ever. So just kind of be aware of that. I was on with you a few weeks ago. I said usually February's kind of weak. Kind of blew that up like you just said. Also, the last 3 days, virtually nothing's happened. S&P has been within 20 basis points of where it closed the day before, 3 days in a row. You got to go back 15 months. The last time we saw 3 days that were kind of, quote unquote, that boring. Remember that old saying about don't short a dull market? That's in the back of our head. But, to put a bow on this, when you see, I call it the Valentine's Day indicator, almost a Valentine's Day. Everybody have a good Valentine's Day, by the way. But if you're up 4% for the year on Valentine's Day for the S&P, which we have a real good shot at doing this year, the rest of the year, Joe, so the rest of the year, not the whole year, the rest of the year, starting on Valentine's Day, is higher over 90% of the time, up 13% on average. So a good start to a year once you get to Valentine's Day historically does say maybe that momentum can continue.
Past performance, no guarantee of future performance. We hear that a lot in every mutual fund disclosure. Would you bet on that? I don't know whether that means anything, but I guess that's the old January indicator. It used to be as the first week of January goes, so goes the first month. As the first month goes, so goes the year. But I used to hope for I used to either hope for the NFC or the AFC based on that. Now it's, let me see, white home jerseys win, and then you got to figure out whether it's NFC. I don't know. None of that stuff really works. You know what does work? Stimulus, at least for a while.
Yes.
But what worries me is paying the piper someday. There's a lot of people now that just say, don't even think about it. Overshoot, throw as much as you can at it. We need it. We don't have the normal demand, and just go with it. Do you think we eventually there will be some reckoning? We ask that question every day.
Yeah, we have been asking that a long time, haven't we? I mean, eventually there will, and I get it. Stimulus is a big part of this, Joe, but I mean, the earnings season we just saw, right? 2 months ago, it was supposed to have negative earnings growth by about 10% in the fourth quarter. Now it's positive. The manufacturing data, the services data, the housing data, all this stuff's coming back. We get it. The employment backdrop's the one part that's not coming back, and that's kind of why we likely will have, a pretty significant stimulus package coming soon. But when you package it all together, the seasonality stuff is fun to talk about. It's like, well, it's not bearish, right? With all this other stuff I just mentioned, those are still signs of this overall, we'll call it new bull market that started, almost a year ago next month, is still alive and well in our view here at LPL Research.
So I guess the best thing to look at might be sentiment for looking for maybe an easing of some of the bullishness that may come mid-year or something, or who knows, it could come anytime. And then maybe after you shake out some of the, complacency, because I think you'd have to say there's some complacency. We've just been sort of drifting higher for, as you say, for at least a year now, not quite a year.
Yeah. There's no doubt there's some complacency and some optimism. I mean, we're up over 70% from those lows on March 23rd a year ago. You kind of match now with the 2009, 2010 start of that bull market. They almost match to a T. We had a 10% correction early in the year in 2010. So, Mark Twain said history doesn't repeat, but it often rhymes. Maybe we could see something like that with a little excitement. But kind of the other things I just listed, we would absolutely be a buyer of a dip here at LPL Research. And we've evened up. We liked growth a lot last year. I came with you all year saying we like growth. Now as the economy's getting better, we've evened up our growth value outlook. And we think, there's opportunity in both those areas, for potentially some strong returns the rest of this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.